Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is August 18th, 2013. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. US stock market is in a correction and gold and silver shine. Gold and silver has broke a previous downtrend. Now they have entered the uptrend and they stood above 50-day moving average. My plan, I have already got out of all the stocks and stock-related ETFs, and I have focused my fund on long gold and silver-related ETFs. Let's take a look at major indices and their daily charts. First is a German DAX index. It's in the uptrend. China Shanghai Stock Exchange Index. It stood above 50-day moving average for a long time, but long-term trend is still down, but short-term may have gone up, and we have to watch closely whether it can hold above 50-day moving average. If this index can hold above 50-day moving average, and Shanghai-related Asia stock will have a hope to enter uptrend. And Nasdaq has broke down with a pretty high volume here, and it's just gapped down, and market has entered the correction, and we have to watch carefully. Nasdaq is actually stronger than most of other indices. This is a mid-cap index. It's coming toward 50-day moving average. Nasdaq is still way above 50-day moving average. Russell, this is a small cap index, is also coming close to 50-day moving average. SP 500 index is a large cap index. It's sitting right at the 50-day moving average. We need to watch this index closely. If it breaks down 50-day moving average, that would be a very dangerous sign for the market. Gold index monthly chart. Gold has rebounded from the previous downtrend. Gold index daily chart. Look at gold. It has came above a 50-day moving average and quickly pull back. Now the second time it broke above 50-day moving average, pull back for 1 day and keep going up. So from the chart, gold has stood above 50-day moving average, and this is a tradable uptrend. And silver is much stronger than gold. It broke 50-day moving average, never look back, just keep on going. So this is a stronger index than gold. US dollar is in the downtrend. It pulled back. Crude oil is in the uptrend. It's consolidating at a high. Gold mining stock ETF GDX also stood above. This index also stand above 50-day moving average. IYR is a US real estate ETF, and IYR is in trouble. It broke down 50-day moving average and broke down 200 moving average all at once. Rebound around 50-day moving average, right above 50-day moving average, and broke down again. And now the 50-day moving average and 200-day moving average has already crossed 50-day going down and below 200-day moving average. That is a death cross. IYR has entered the long-term downtrend. MBB is a the real estate mortgage REIT, mortgage bond fund. MBB is going down pretty hard. When MBB is going down, mortgage interest rate is going up. SMH is a semiconductor ETF. It also came down for below 50-day moving average. Bad sign for the market. USO is the crude oil ETF, and it's an uptrend. If USO can break above 38.62, that is actually a buy point. XLE is an energy ETF. It's sitting right at the 50-day moving average. US financial sector ETF sitting right below 50-day moving average. Financial sector and the semiconductor sector are two sectors that are usually leading the market. Both are in trouble right now, so market is in correction. I share with you 3 watch lists. The first list is the strongest leading stocks. Those are the stocks has not shown any institution distribution. If you buy those, you hold those stocks, you may consider hold on. And second list is the stocks that still hold up in price. They don't have major distribution, but some of those stocks on the second list has shown some subtle trouble sign. You may hold on, but you got to watch out and set a stop order. If those stocks get into trouble, you got to get stop out. Third list are the stocks that broke down. Those are the stocks already shown institution distribution. You must sell them. You cannot hold a stock on this list. Okay, let's take a look at those three lists. C-Trip, very strong stock, and it's in uptrend. Facebook gapped up on earning with a high volume, still holding up. LinkedIn gap up on earning with a high volume, holding up. No major distribution. New Skin, no major distribution, also gap up on good news of the earning. Tesla, uptrend. So those are the four most strongest stocks in this market. ACT very strong, no major distribution sign. CELG is not very good. It's still holding up 50-day moving average, but there's no support. It just keep right down to 50-day. In fact, you have to watch out. See if it break down 50-day moving average. That would be a trouble sign. Michael Kors is in the uptrend. Light in the Box, a Chinese online store, new IPO stock. It's very volatile. This stock is still in the uptrend. Netflix in the uptrend. OII in the uptrend, but find support in 50-day moving average. Overstock again. Okay, Overstock in the uptrend near the 50-day moving average. PRLB. PRLB is in uptrend. It's above 50-day moving average, but look at this. The second peak is lower than the first peak. That is subtle trouble sign. And look at the volume. And on the down days, volume is pretty high. That's also not a very good sign. Starbucks, uptrend. Sprouts Farmers Market and new IPO. This is on my watch list, and nothing in culture but no buy signal yet. Yandex is also in the uptrend. Let's take a look at the third list. Those are the stocks in trouble. You cannot hold on to them. OAS breakdown with high volume. TripAdvisor, very high volume down day right after it make a new high. It just sold off pretty hard. That is institution selling. So when institutions are selling a stock, you cannot long them. Okay, and I'd like to share with you some of the gold and silver related ETF. GLD is correlated to the gold price. SLV is correlated to the silver price. GDX is correlated to the gold mining stocks ETF. So this is a gold mining stock ETF. GDX is usually very volatile, but when gold and silver go up, GDX go up the most, and silver goes up more than gold. Leverage ETF, those are the ETFs that leverage multiply with the gold and silver price. UGL is a 2 times of gold price ETF. So if gold go up 1%, UGL will go up 2%. However, on the flip side, if it gold goes down 1%, UGL also goes down 2%. AGU is a 2 times correlation with silver. NUGT is the highest correlation. It's a 3 times correlated with a gold mining stock ETF. So NUGT is the most volatile. And those leverage ETFs are good for short-term trading, but they're not suitable for long-term holding. What to do during the market correction? First of all, there should be no new buy. Don't buy any stocks. And you may hold on to existing stocks only if they still hold up in price. And you may use a stop order to protect your portfolio. If the stock break down with high volume, you must get out. That is a sign of institution selling. You may consider buy gold and silver ETF as an alternative investment. That's all for this week. See you next week.